Hi everyone, we're going to go ahead and look at finviz.com first just so I can show you the overall intraday pattern of Monday stock market session. As you can see, all three of the major market indexes that we follow bounce well off the lows of between the 11 a.m. and 12 p.m. hour. And as you can see, they rallied throughout the day until the very end of the day when a kind of violent sell-off hit the market. But still, stocks found some support at the very final 2 minutes, bounced off those lows to prevent us from closing too ugly. So as you can see, overall, we bounced well enough off the lows. Bearishness kind of stayed high pretty much all day again down here intraday on FinViz. So overall, sentiment is on the side for the bounce to the consolidation, and then the probability of a breakout higher to continue. But overall, as you can see, despite the overall dull session overall, as not much happened intraday, it was a nice move off the lows. And that's where we will go check a look at the NASDAQ to see that we're still consolidating along quite nicely. In July, we are also doing that on the S&P 500, also doing that on the Russell 2000, which had the roughest day down 0.75%, but still overall just consolidating the gains. As far away as we are from the 200-day moving average, it would be nice for us to do this all August and September long, to be honest with you, and then break out in October. That would be beyond perfect if we could get something like that, but right now it's just wishful thinking. We'll see if it can happen. But overall, whenever you have a market acting like that, and stocks like Facebook just piling on to the winnings that it showed after the Bible, it wasn't a Bible gap up, but if you use straddles or strangles, like our chat room member Paul did, you scored huge. You made over 1,000% return on the call. You lost 100% on the put, and now you're still even making money on the calls as Facebook continues higher. But when you see strength like this in Facebook, and you can see further strength continuing in Tesla, look at all the below average volume moves higher. That's what's been tough. Like, I was ready for a breakout of this little tight consolidation pattern, but this breakout here, back here on that volume, was a no-go for me. However, if you got it, congratulations. That means you held through that scary, scary day back here in July, which I would have personally found it hard to have held during, at least the entire position. But if you did and you're still long, congratulations, because Tesla is a leading stock. And this is a stock I'm going to be watching for really, really closely for the years to come. And another stock I'm going to be watching closely for the years to come actually gave a buy signal today. DDD, 3D Systems, is producing a buy signal off the 50-day moving average, breaking out of a cup with high long handle pattern, best seen on this weekly chart and a daily chart. Actually, this cup pattern from January to the top of May here is very clear. The high handle from May to the breakout here on today's trading session is quite clear. The low volume in the base is good. The volume's great. Bad news is that earnings are tomorrow, so it's a risky trade. Therefore, 2% in the risk account, only 1% in the non-risk account. So I like the setup, and its brother, SSYS, had a nice move off the 50-day moving average today, which hopefully is sister stock move and is indicative that the 3D stocks will continue to do well tomorrow. But Tesla, Facebook, and DDD, I tell you what, as long as you see those guys rallying, there's no reason to think that we're not going to continue to rally anytime soon. And also, at the same time saying that, the uranium stocks off the lows are doing quite well. URA, the ETF, uranium ETF, looks excellent, but some of the stocks in these groups are going gangbusters, and I know for a fact they're being promoted heavily by penny stock guys. USU, though, is just incredible, because whenever I first saw it being promoted, it was over here in the $4 area, and now it's up here at the $29 area. I tell you what, boy, oh boy, don't you wish you rode that pump higher. However, one day it's going to have to top and come back down at least half the way you would think so. So keep that in mind. URRE continues. I saw it being promoted midday, I guess, on Friday, and it continues on Monday. Quite impressive for those stocks overall. And then today I had a potential buy signal in CCUR. If volume would have been larger, the base from July would have been longer, and BOP would have moved to max green BOP. You get max green BOP here, you get higher volume here, a longer base here, then this move, I'll go long. But right now, Whenever I look at an arithmetic chart of CCUR, I see a stock that doesn't like to break out and move higher smoothly, and it's a real jaggedy stock. I am sure this time it might be different, but I don't want to take that risk. Other nice moves today included in the biotech group, PSDV and BIOD. Once again, though, very, very rough chart patterns on an arithmetic base. It's not necessarily a stock that I want to play. And then the only high quality long that I was considering was MELI. Still, overall, in a basing pattern, it's quite low, still making a right side of the base. Didn't have a big enough volume surge from a long enough kind of consolidation sideways to be considered a long. It's kind of like WIT. You know, WIT is going to need a lot more work before then a handle forms, and I want to get long. So the bottom line is that we continue to consolidate these gains like we're doing in the market. I will be happy, especially if we can do that for the rest of the year. What it does not make me happy, though, is that I do have one full sell tonight. Biogen is failing. Already got out of most of it, so this is not, you know, a big deal. But the big deals are in AMBA, as AMBA is closing below the 20-day moving average on strong volume right after a long signal, which means that we have to pare back. Since the 50-day moving average right there, it's not going to be 50%, it's going to be 25%. On top of that, the 1752 close is still right around basically the 1740 is the low a day. So as long as we're holding above that, there's no need to get to 50 to 100% with the 50-day moving average right there. And then the worst partial sell signal today is VVTV. I just don't understand how stock charts that can look like this, with all of this accumulation, all of this green bop, before 2008, you never, ever, ever would have seen these violent one-day shakeout moves. But damn it, they just continue to continue to continue to continue. And we got one today. A barely above average volume shakeout move. The shakeout move is just strong enough to close below the 20-day moving average. And since it's above average volume, that is a 25% sell. And if it sells off again on heavier volume tomorrow and closes below the 50-day moving average, that's a 75% sell to possibly 100% sell, depending if BOP goes yellow or red. But once again, it's just kind of upsetting because it's not really upsetting because of our positions, because we're not hugely invested in any of these anymore. But man, before 2008, I'm telling you, you used to get a pattern like this right here. You knew immediately, I need to put 10% on this signal, 10% on that signal, and then 10% on that signal, and then you would be about 30% long in your account in VVTV. And there is no way you would see a one-day sharp 9% drop in an overall uptrend like this before this QE market started. So it's just something we have to deal with, and it is a big deal, but at the same time, if you're diversifying your holdings into all top stocks, it's not a big deal, as no one stock should make or break a portfolio, especially in a QE market where we just magically hit new highs on below average volume. And as you can see, June, July, and as we go into August, below average volume.